Hello, welcome to Fintech Impact. I'm your host, Jason Pereira. Today on the show, I have Mohamad Sawwaf, co-founder and CEO of Manzil. Manzil is a Canadian-based Islamic banking and finance platform. I had Mohamad on my other podcast, Financial Planning for Canadian Business Owners, to go over the fundamentals of Islamic finance and how they differ from traditional Western finance. We're going to touch upon this here, but if you want to know more about that, by all means, check out the other podcast. It was very well received. But specifically today, I brought him in to talk about not just Islamic finance, but how he's using fintech as a platform for distribution of Islamic finance tools. And with that, here's my interview with Mohamad. Mohamad, thank you for joining me yet again.
Thank you for having me once again, Jason.
All right. So Mohamad Sawwaf of Manzil. Tell us about Manzil.
So Manzil was established basically based on a problem that has been ongoing, not only personally, but of course, within the community. As you know, I've been an advisor in the past. I've been working at the large financial institutions and just running into the same complaints with respect to financial products, especially on the financing and the investment side, where nothing was available to this demographic. And so Manzil was created to really fulfill that gap of the 1.6 million Muslims that are here in Canada today, so that they can not only just that are currently financially excluding themselves, but actually get into home ownership and wealth management solutions and start to build their wealth for the very first time.
As I said, we went into a deeper dive on Islamic finance in my other podcast. I'm going to direct people to that in the links. And to me, this is a ridiculous situation. Ridiculous in that it is a ever-growing and burgeoning community within Western countries, Canada included, and to not focus as a financial institution on financial inclusion of those cultures is not only a missed market opportunity, but just an injustice. And beyond that, like we talked about this last time, financial inclusion and access to financial services is one of the big differentiators between successful nations and non-successful nations. If you have a cohort of your populace that can't access these solutions, you're just holding them back with both arms tied behind their back. So I'm going to get off my pulpit now. So let's talk about, so you talked about the difficulty, talked about the genesis. You saw the opportunity. What did you do to try to fix it?
Absolutely. So when you think about Islamic financial solutions, obviously there's a religious component to the way these structures are derived and of course are executed in the marketplace. And, we can go over the theory, and in theory, everything sounds fine. But the most important piece is actually how do you localize these structures to incorporate, the secular system that we have in place in Canada, which not only includes the regulatory environment, the legal environment, as well as the tax environment. So, for example, if we introduced a murabaha structure, which is a back-to-back sale type trade-based financing structure. So, you wanted to go and purchase something, but you can't take money from me because the lending of money in Islam, it's not a commodity. You can't earn money off of money, right? So it's not allowed. So I as the financier or the lender would have to go in, purchase that asset on your behalf, and then resell it to you. Now, when you're doing this in a tax-free jurisdiction, that's easy, right? Like there's no implications from the buying and selling of things at different prices. But then you get into the Canadian tax space where, okay, well, I'm going to buy it at $1 and sell it to you, the end user, at $2. Well, now there's an implication of capital gains tax. What about HST on this item, right? There could be implications of double taxation on that end. If we're now introducing assets like homes or commercial properties, well, what about the land transfer tax that's involved, right? So what we did pre-launch is really go into an extensive R&D mode for nearly, I would say, 2.5 years. And that included law firms on Bay Street that we had to bring to the table, consulting and audit firms that we brought to the table, as well as an international Sharia advisory firm that understood common law, right? And they had extensive experience within the UK environment where Islamic finance has been established officially since 2003 and fully regulated. And they have 5 fully fledged Islamic banks and 20 Islamic financial institutions. So we lended their experience within the common law structure to be able to make it happen within the Canadian space, alongside the fact that we needed to work within what was available to us because we knew that lobbying efforts and changing of rules and asking for exemptions or administrative relief would not be possible. And so that's how we went about really putting that into place.
Yeah, you sign up for quite the marathon, my friend, because this is never something and it's interesting, like the little tax implications, like you talked about it. And let's be clear, no one's talking about any desire to circumvent the tax code. It is to basically recognize the fact that the tax code was designed to allow for certain things like home purchases to basically happen in a way that was not going to be punitive from a tax perspective. And if you're restricted in some way, religious or otherwise, from participating in that type of thing, and your only alternative is something outside that framework, then you don't have the same kind of equal access to that type of opportunity as someone else. So it's not surprising. No law can fully contemplate every permutation, but it's something that needs to be addressed a little bit more readily. So let's do the quick 101 on how does Islamic finance differ from Western traditional finance?
Absolutely. So I always tell people that Islamic finance isn't just for Muslims, it's for everyone. And it's synonymous with structural finance, trade-based finance, or just even ethical finance. And so there are a few main principles, or what I like to call is the don'ts of Islamic finance, right? So number one being interest-bearing transactions, right? So because there's no value on money is not a commodity. It can't really earn anything on in and of itself, right? It's not an asset. We're in a fiat world. So interest paid or received is not allowed. Speculation is also a don't of Islamic finance. So you can't get into any speculative type of investments or investment strategies. You also want to remove any points of uncertainty within that. And then, of course, there's the ethical pieces. So unfair exploitation or unjust enrichment, or even being part of or having an unethical purpose, right? So, many people in the Islamic finance realm, or people who've heard it for the first time, may have heard that, we don't get involved with industries that involve themselves with, pork or alcohol or defense or weapons, gambling and entertainment, tobacco, and even pornography, right? So, some of these are identified as the sin stocks. But then, of course, outside of that, you can invest in anything else that you'd want to do, or you can open up a business that doesn't support those types of activities. But, the real piece here is, how do you finance them, right? How do you finance these businesses if you're not allowed to finance with them with money and then just earning money back in return, right? And so this is where we get into really easy to understand structures that I like to say are easy to understand. So, it could be in a ijara or a lease agreement. It could be in a musharaka, which we like to call as a partnership agreement. Or in the previous example that I just showed you or talked to you about, murabaha, which is basically a cost plus agreement, right? So
we're going to go into both muharaba and the other one. Yeah. I'm going to butcher the name yet again. Musharaka.
Musharaka.
Is that right?
Yeah.
Musharaka. Yeah. Okay. So we'll go into both of those in a minute. So, but in general, there's ways, right? Like it's not like the entire Islamic world didn't figure out ways to not work within the framework set out in the Quran for what was acceptable, right? It's just that they're not common to hear. So let's talk about those mechanisms, right? So we touched upon them briefly. Let's go into them a little bit more. So start with the murabba. How does that work? I'm going to butcher
murabaha. Yeah, that's absolutely fine. No problem. So again, murabaha is a cost plus situation, right? And again, when we focus on asset-backed or asset-based transactions, right, this is the number one stipulation when it comes to entering into these transactions. So murabaha, I have a phone store. You walk into my phone store, Jason, you say, I want to buy this iPhone. I say, listen, Jason, it's $1,000 cash today. You come to me and you say, I don't have $1,000. Generally speaking, what would happen is you'd probably go to the bank, enter into a third-party loan agreement with them. So they would give you $1,000 and they say, give me $1,200 back after the year. Call that 20% interest, right? Then you say, hey, Mohammed, I have your $1,000. Here you go. Give me the phone back. No problem. That's the conventional way of doing things. In the Islamic finance way of doing things, that bank would have to purchase the iPhone from me as the retailer. Now they say, hey, Jason, I own this phone. I'm going to resell this back to you for $1,200. Again, it's a 20% profit this time, not interest, but they have to have ownership of that asset, right? Because there has to be a shared risk. And yes, the shared risk could be a moment of time, right? It could be a matter of minutes, but at least it solves for that element. And now what you have is an agreement between you and the bank that sold you an asset that you're now going to pay off over the next 12 months. And for that convenience of paying it off over 12 months, they're charging you a 20% profit, right? This is not a play on words. This is actual structural elements that need to be in place and documentation in order for this transaction to be certified halal.
And because asset backed, I mean, this is no different from a mortgage bond in that basically it's secured by the asset itself, right? So the risk is reduced by that. I mean, you're right. The risk exists for that moment in time where they're the sole owner, but then after that point, should the person default, the asset can be repossessed. And this is not that much of an extension or huge deal. It's a subtle difference to how, we talked about this in the last podcast, Christianity got around the usury laws within the Bible, which was to originally discount bonds. Hey, I'm going to borrow 900 from you today. Technically, I borrowed 1,000 from you. I got to repay. It's just, for the convenience of today, I basically get it now. So basically, the difference there being is that the only risk is the lender's risk. And of course, if it's asset-backed secured, then there is no risk. There is no ownership. So that I understand. I always wondered why that trick never worked in Islam. And I understand because of that ownership aspect.
Yeah.
That is how you get around it. So makes a lot of sense. So,
and there's a huge misconception out there about recourse on the asset. Like there is full recourse mechanisms on the as the lender, because I come across this all the time. A lot of people think, oh, well, in Islamic finance transactions, because you have to be fair and you can't be unjust. You can't go after. I'm like, who said that? Like in Islam,
so is it unjust to repossess a house that their mortgage wasn't paid? That's not unjust, right?
Right.
And even then, if the bank sells it, you still get your net equity after all the costs and
Absolutely.
everything, right? So how is that unjust? Like they're not taking your equity. Anyway.
Yeah, I know. The unjust piece is, and we know the banks or financial institutions that get into these types of contracts is they'll just tack on fees for the sake of tacking on fees, whether it be admin or legal. That's really the unjust piece, right? But like you have an asset that hasn't been fully paid off. You have complete recourse on that asset, sell it off, make yourself whole again. And whatever's left, give it back to the client. There's nothing wrong with that.
And just about every religion, probably, I'm not sure about every religion, but at least all of the, Judeo-Christian Muslim religions, they all have rules around keeping your word, right? Like,
yes,
so
absolutely.
it's considered, recourse is not considered unjust. So, all right. So that's the first one. Let's talk about musharaka. Musharaka. Okay.
Yes.
Jeez. All right. I need to spend more time. But continue. Tell us about how that works.
Yeah. So musharaka is really easy. Just think of it as a GPLP, right? Or two people that went into a partnership agreement on a particular asset, right? So again, let's use the home financing, right? So you're coming in with your 20% down payment. I'm coming in with my 80% down payment or financing, right? So now we have a partnership agreement where I own 80% and you own 20%. But what's in place is that you are basically making payments towards me so that I can transfer equity or part of the asset over to you with every payment that's made, right? So what we call this is a diminishing musharaka or a declining balance musharaka. So that as every payment is made over time, your interest in the property or asset increases and mine decreases with every payment that's made over to me until such time that it's fully paid off. And then, of course, title is fully transferred over. You have complete ownership over the property and away you go.
So talk to me about, so there's an obvious risk sharing there. Absolutely. Because we're both involved. Talk to me about the risk mitigation for the non-primary party here.
Absolutely. So when it comes to risk mitigation, so again, number one, you can introduce clauses where you have the right to occupy the property. We're acting as kind of like this silent partner. And of course, you have to maintain the property in a certain way. It can't decrease in value with anything that you've done personally to you can't just smash walls and do whatever, right? And of course you're paying for your increased interest over time. Now, when there's full recourse, right? So if you breach a default of payment, or even if you sublease it to somebody else or rent it out to somebody else, which then damages the value of the property, I'll be able to have recourse on that. You're responsible for property taxes. You're responsible for the upkeep, the maintenance, the utilities. No different than what we would have here, right? And then, of course, if we were in a situation where, let's say, we sold the property at a loss, right? Well, I'm first payee. So I need to make my principal balance owed to me whole. And then, of course, whatever is left, I can go after personal if I need to be. But we all know that may not work because you're going to claim bankruptcy. So I'm left holding the bag with whatever's left, right? But there's so many mechanisms that are built into place to ensure that from a risk perspective, over the course of the ownership of that asset, I have my rights protected as the financier in place.
And just to be clear, if I'm the person buying in, over time, am I buying in at the market value, or am I buying it at the original value,
You're buying
or some other contracted value?
Yeah. So what happens is, so let's say the purchase price of the property is 500,000. So, I've given you 400,000 of financing, which is 80%. You put in your 100,000. My financing, right? There's a profit tacked on top of that. So let's call it an implicit financing rate of whatever, 3-4%. So that's how it'll be a principal and profit payment to me that usually won't change.
So it's like muraba, but it's, again, butchering the name, but in successive payments as opposed to a single one.
Exactly.
So, it's a series of equity transactions in the end. Excellent. So that's the brief 101 on Islamic finance. We went into this deeper in my other podcast, talking about the use of technology in terms of distribution and basically providing people with these solutions. How, besides the fact that people needed access to these things, how are you using technology to enable them to actually get their hands on them?
Absolutely. So we're 100% digital platform. And this is really the only way that we can penetrate our community across the country, right? Without having to establish bricks and mortar retail branches or offices that the typical financial institution would do, right? So you go online to manzil.ca. You basically are inundated with who we are and what we're here to do and what we're here to solve. There's a bunch of blog articles about the differences between conventional finance and Islamic finance. So we're very focused on the education awareness piece and the financial literacy about that. We share with you our products, and everything goes through a single portal, right? So when you sign up on the Manzil platform, you immediately get a dashboard, which is basically just a menu of products that are available to you, whether it be home financing, whether it be our prepaid card solution, or our investment program. And so you would basically then go down that product route, or that product, let's call it story, and sign up for it. And we basically guarantee that going through our platform, you don't have to worry about the Sharia compliant. You don't have to worry about whether or not you're entering into transaction that's in the gray space. Like, we have taken care of that for you so that you can sleep peacefully at night, knowing that your finances are in order and in accordance with your faith.
So basically, at the end of the day, really, you're a conduit, right? You're a conduit in a platform. You obtain the Islamic client who basically is looking for these solutions within the country. You then serve up everything you possibly can to them. Because, frankly, when I say serve up, the reality is you're dealing with fundamental issues, right? Looking at your website, it is basically payment cards and buying a house and buying cars, things that the rest of us take for granted that there isn't friction to, other than just applying for credit. So where do you see it going from here? You're already in those spaces. What else is lacking in the current ecosystem that needs to be brought to the table for people who need to borrow or who need to operate in a halal manner?
Yeah, absolutely. There's actually a plethora of solutions that are still required within the community. And number one is a deposits, like checkings and savings accounts. And we can get into like why savings is pretty obvious on the checking side too, right? Like there's a deeper purpose when it comes to just not enabling interest-based banks to use our money for the purpose of generating interest. So there's that piece. Student loans.
Well, that's curious because I was going to say, what's the problem? If the bank doesn't pay you interest, then technically you're not offside. But I see by extension, you're enabling them to get into usury, so therefore you're offside.
Right.
Wow, you quite the labyrinth you have to navigate. But continue.
Yeah, student loans or student financing is a huge piece, right? Like there was actually an article last year, I think, in Forbes magazine, or maybe it could have been the New York Times.
But the income sharing packs or something like that.
So income sharing agreements, would fulfill this, right? But they were highlighting this Muslim girl who got into like all the Ivy League schools, but didn't have the financing to be able to do it. So she was actually just like saying, I'm not going to get myself into $300,000 of interest-based debt due to my faith, just so I can go to these schools. So, and I don't think she had any scholarships, or maybe it was limited scholarships, but it wasn't a full ride, right? So income sharing agreements, can help this. But again, where are you sourcing the capital in order to be able to fulfill this, right? So, funding and capital attraction into these programs is a real big concern that we're still solving for. We do have access to, let's call it retail-based capital, but at the institutional level is where you really need to get that good cost in place and be able to kind of launch this at scale. Other agreement, like
let's stay on the education one for a second. I mean, two pieces here. First off, the other piece is that debt is so interwoven into the U.S. system. Perfect example is, I applied for grad school in a couple of Ivy League institutions because my test scores were good enough, but nevertheless, my resume probably was at the time for sure. But the second you apply to Harvard or Yale or anything like that, you get letters from Citibank and other places saying, by the way, you're conditionally approved for 6 figures worth of debt, assuming you get in, right?
Yeah.
It's like, I didn't even approach them. But just the submission of the application got me pre-approved by that financial institution, right? So
wow.
It's just, the mechanism is so intertwined that's the norm. Now, go back to what I mentioned briefly about the income sharing. And maybe this was a couple of years ago, but several universities in the US now have created programs whereby you can share some of your income, a percentage of your income. And it's a sliding scale based on how little. If you make little, you don't give a large percentage. The more you make, the more you give. That basically goes to the university in lieu of the tuition cost, the exorbitant cost of education down there. And immediately that struck me as like, hey, this is a possible. This legalities around contracts and everything else, but this immediately is like there's a symmetry with what you're trying to accomplish here. And is that a solution that's been used in the Islamic world before?
I don't know of any real life example elsewhere, but I know that we've studied this as a solution, and we know that this can be a solution that we can bring onto our platform as long as there is access to a decent rate of capital, decent amount, and at a decent cost. And there's nothing wrong with that. And it's just more fair when you think about it.
Well, I mean, absolutely.
You don't want to stop somebody from getting an education, especially if it's a really good program and they can give back to society, right? Like human capital is what we really have here in the Western world.
Well, and part of the message there was that it's a diversified portfolio of jobs, right? So, and no one really knows what there's definite indications that if you take whatever program, whatever school, odds are your income's going to be higher, and correspondingly in other places. But the argument made was that, hey, the school is actually a little bit safer. Like the school is safest by taking your debt, but the second best step is essentially, hey, if we take a slice of everybody's income when they get out and reduce our cost here, if we diversify enough, we'll probably bring in about the same amount of money, and we'll do it while letting people live their lives and not basically crushing them under student debt.
Yeah, and you know what? Like the U.S. there's obviously a huge debate around the loan forgiveness on the student side and all the stuff. And but like, I don't know if you knew this, but like student loans, like even if you were to go bankrupt personally, you cannot get away in the US.
It's insane.
You can't get away from the student debt that you have, right? And actually, I had a friend that went to Harvard. Their endowment fund is the largest in the world. And he was actually getting a loan from the endowment fund. But the rules around him paying back are super egregious. Like basically, here's 200,000 at, let's call it 8 to 10%. And you cannot pay this back early. Even if you wanted to, you still have to pay us whatever the 25 years of interest on this loan was. Imagine entering into an agreement like that because you don't have a choice.
Wow. This is why there are so many advisors down there who specialize in dealing with student debt, because it like, not only that, I mean, every program I've ever heard for forgiveness or whatever has all kinds of complexities. So anyway, we can go on. That's a separate episode. Let's go back to the core. So student debt, clearly an area, or student enablement of people to go to post-secondary educations is an area that you basically identified. What else? What else is there that you want to expand it into?
Small business financing.
Oh yeah, big time.
Inventory financing, right? Anything associated with, how many professionals like doctors and dentists that want to set up their own practice, and the banks have these great programs in place, right? For these professionals, but at the end of the day, right, they don't enter into it. They'll maybe get into they'll just share their friend's practice on a revenue basis and not actually have any ownership. All of these things restrict you from building wealth over time and giving back to society, employing, creating jobs, right? Like there's so much restrictions when it comes to the potential GDP that could be created from this group. You're hindering it. And nobody wants to get involved. Nobody wants to solve for this problem at scale.
Well, I'm glad people like you exist, because the reality is you're going to help enable that group. Because again, why people, and we discussed this in the previous podcast, typically immigrants are predisposed to starting businesses and usually are, if you're bold enough to be willing to relocate your entire life, you're usually bold enough to be willing to take risk. And we're not giving them the tools that are basically required to create risk that benefits society. And that's tough. That's tough. Yeah. So, all right.
I have so many friends. Sorry, before that, I was just gonna say, I have so many friends that have e-commerce stores or Shopify stores, right? And they all want, the ClearBank program. But they come to me and they say, Mohammed, like, can you structure? I'm like, I'm happy to structure this program for you in a Sharia compliant way if ClearBank is willing to come to the table, and we can just basically create a separate agreement that would fulfill, right, the rights and obligations of these. And you're going to be protected. You're still going to earn your rates. We're not talking about reducing whatever money that you're going to make on the table. Like, you're still going to make your profit, but we just have to structure it. It's process and documentation.
Well, inventory financing to me is the easiest one of all, right? Like, I mean, between Shopify, Clearco, payability, God, there's so many plays in this space.
Yeah.
Right. Like, they're tying into your data on, I know Amazon's going to pay these guys in 30 days. Like, I know that for sure, but they need money for inventory now. That you can, again, and I think, going back to what you've taught me on this, all they have to do is technically take ownership of the inventory for a moment in time and facilitate that. And they're making the exact same money. Like, to me, it's shocking that this isn't like, I don't think this is that hard a coding issue. I don't think this is that hard a contract issue. Like, no, just turn your lens to it. Like, my God. Anyway,
there's even something simpler than even taking ownership of the inventory. There's something called a wakala, or an agency agreement. I could actually be the custodian of your funds and basically say that, give me this amount of money and I will give you this amount back, because you're basically allowing me to control your money, right? And we could create just an agency agreement that's in place, where I'm the custodian of those funds. I'm going to turn it into a profit, and I'm going to give you this money back plus some.
Yeah. Okay. It's equal parts inspiring and frustrating to hear this, because it's just, there's more than one way to swing a hammer on this. Anyway, so before we wrap up, 3 questions I asked everybody. First question is, if you had one wish for something to change in your company or the industry as a whole, what would it be?
Oh man, it would be more of an industry. I would love to establish an Islamic finance regulatory framework.
Interesting. Yeah, I mean, I could see simply being even just an offshoot of the current regulatory framework. So that would not be a threat. It's just
that's what they did in the UK, right? You have the FCA, and then from the FCA, they created a separate body that said, here's the rules around how we want Islamic finance to happen, and we're going to regulate that, but we're also going to allow banks to be able to do it. And yes, we know that you need X, Y, and Z exemption. Like, the main exemption they made was the double stamp duty, which is basically you can't be taxed twice on the same transaction that's being conducted as part of one deal. That's it. So they abolished double stamp duty, and they say, go ahead, because murabaha is used in 80% of Islamic finance transactions. Right? You covered 80% there.
Leasing, basically, there's the 80-20 rule right there. Less than 20% of logistical problems are basically cover 80% of the market. Well,
right?
Crazy.
So if that was one wish, I would love to establish that.
Fantastic. Second, and I would say fantastic from the standpoint of, quite frankly, if there was a regulatory body, then that's the body that could work with the government to solve for these problems more effectively. Anyway, second question I have for you is, what's been the biggest challenge in getting the company to where it is today?
I think the biggest challenge has just been overcoming the preconceived notions that people bring to the table about Islamic finance, because it's all wrong, actually. Like, what they think needs to happen for these transactions to be working models in the marketplace is completely, I don't know who educated them. I don't know where they got their information from. It's absolutely like, it's actually a joke, what they think Islamic finance is and how it would work in Canada. And the best part is, like, we have real deals in the market, and we just show them, like, here it is. It's happening. We didn't ask for any we didn't lobby. We didn't ask for any exemptions. It's all within the rules. And, it's working absolutely fine. In theory, it could have worked out differently, right? But when you have something in practice and the proof is in the pudding, there really should be no denying, right, that this isn't a model that we can incorporate into Canada and that we can scale amongst this community and beyond.
Last question for you is, what excites you about what it is you're working on and gets you up in the morning every day to keep on fighting the good fight, especially in your case, given it's very few people that I have to talk to where it involves changes in regulation, tax law, financial structures, contracts. So what keeps you going, man?
Honestly, I think what keeps me going is the community. The community themselves, every time they hear about me or they engage with me, it is a burden. Like they 100% say, Mohammed, this is like, you have the burden of the community to make this work. But that in and of itself, that challenge excites me, right? Like I love problem solving, and we have had our ups and our downs. We've had barriers that we thought would be impossible to break through, but we got through with it. And it's not just me, but it's the team that I've put around me that has been able to assist on this. And so the community itself, with their support and them basically telling me that this is their only chance or their last chance, they think, and their last hope that something like this can come to full scale, is what gets me up in the morning, to be honest.
And unfortunately, many immigrant communities, when they come in, have to basically not just, adapting is one thing, but there's certain things that don't have to be adapted, that frankly, just it hurts no one to change some rules to basically enable what's necessary. And frankly, it's a hard battle to fight. So I commend you for it and encourage you to keep going.
Thank you.
Thank you yet again. Two fantastic podcasts in a row.
Appreciate it.
Excellent. So that was Mohamad Sawwaf of Manzil. Hope you enjoyed that. And as always, if you enjoyed this podcast, please leave a review on Apple Podcasts, Stitcher, SoundCloud, Spotify, or wherever it is you found this podcast. Until next time, take care.
This podcast was brought to you by Woodgate Financial, an award-winning financial planning firm catering to high net worth individuals and their families. To learn more, go to woodgate.com. You can subscribe to this podcast on iTunes, Stitcher, and Google Play, or find more episodes at jasonpereira.ca.